Guys, on position sizes, I'll just give you a rundown. I know people are trying to get feel for concepts, and I guess even in trading, there tends to be this notion that people are always looking for some sort of, holy grail, or they want black and white, or we even tend to do analysis. And this isn't just for the new trader. This is experienced. This is just embedded in old Wall Street nonsense. When you look at CNBC, or you listen to some economist or somebody at XYZ bank, some Forex strategist, it's never one thing when you're trying to analyze, it's never one thing, especially in global macro. Someone wants to talk about global macro, meaning they want to talk about stocks, they want to talk about fixed income, they want to talk about the dollar, they want to talk about the euro, they want to talk about interest rates. It's never just one thing. So it's just when people when they're on TV or they're writing an article and they want to narrow it down to one or two things, that's absurd. The economy is like a rainforest, so that everything's connected. It's very complex. And when you get into the psychology of trading, that's when you really start to think about the concepts of things being random. And when you understand that every outcome is random, meaning you can look at a chart and you can be looking at the same price level, but you got to realize that every day or every moment that the market's open, there's new participants, there's new positions. So at any moment, you could have a big player, whether it's a central bank or someone with a big position, can come in and affect that market. And so even though the probability may seem the same, it's always going to be completely random, because not one event is like the other. So there are always new events, different probabilities, different outcomes, but it's never one thing. So same thing when you're looking at position size. I can't just tell you, okay, if you're trying to construct a portfolio, take 10 different crypto pairs, 10 different tokens, construct a perfect portfolio is 10 tokens with each 10% of your total account value. That's not really the way to do it. So when I have somebody asking me they'll hear me tell my traders, well, let's get heavy here on this candle or that candle. Or I'm increasing my position size, or I'm scaling in and I'm keeping my first couple buys here light. Usually that has to do with one particular trade. So it's tough for me to answer those questions in text, because I don't know if you're trying to construct a portfolio of your own. So maybe you have 10 grand and you want to commit that to cryptocurrencies. I don't know if you're talking about your overall net worth and you want to put X amount in cryptocurrencies, X amount in gold, X amount in large cap growth funds or mutual funds, or you want to set a percentage for Forex. And that's all based on so many different things as far as your net worth, your risk tolerance, blah, 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 blah. But as far as what we tend to do with the crypto stuff, and like on the investment club, the crypto trading group right now, is we're constructing a portfolio of altcoins and then what we call the majors, the main big market cap coins, Bitcoin, Ethereum, Litecoin is kind of struggling lately, but Ripple's up at the top. But the big market cap names. So if you were trying to do that as a portfolio, it's different for what we're doing, because we're going to constantly be adding new members, which means we have more capital. Just like a mutual fund or any open-end fund, you're bringing in more assets. So naturally you can take more positions. But if it's just your account and you have 10 grand, you want to start putting to work in the crypto space, then depending on how aggressive you want to be, you probably want to have some Bitcoin, some Ethereum. Maybe that's 25% or 50% of your portfolio. And then the other 50%, the other 5,000 in this example, is start picking up 5 to 10 different altcoins. But you want to pick those up as the opportunities there. You just don't want to start putting 1,000, 1,000, 1,000, 1,000 in on each one. If Ripple is oversold, there's opportunity in Ripple. Maybe you start building a position there. If something like basic attention tokens had a pretty good run, do you really want to start a big position? Probably not. You only want to start a couple lots. So I kind of tend to break down. I tend to break down the portfolio that way. When you look at it as a pie, and you know, there's no, again, this isn't black and white. You know, companies like Fidelity and stuff, they try to make it so simple and act like rebalancing a portfolio is some, how you work your positions matters more than how you divide the pie up. I mean, obviously if you're 50% Bitcoin and you have all these other altcoin pieces, these smaller plays are going to have less impact than you're mostly just invested in Bitcoin. But if you got something like this is Bitcoin, this is Ethereum, this is Litecoin, this is Ripple, or I don't know, pick your other major like Factom, or you guys get the point. So there's, I'm not sure if, like Dan was asking questions about that. When we're day trading, I tend to think of my day trade account or multiple day trade accounts as you're using that entire amount of money as your buying power for the day. So if you have 100 grand, your buying power might be, you know, 50 times that. So you're basically, your max position is based on your margin. But if $100,000 account, I might be able, depends on what Forex pair I'm trading, but I might be able to get into euro dollars, maybe a $3 million position before I use all my buying power. So based on that, I kind of tend to break my trades out into 10 lots or 10 bullets. You'll hear people say, well, I'm saving some money so I have more bullets. Well, what they're saying is that they want to save some capital or keep your powder dry is another term, so that you can buy more on dips. So for example, I don't know how well I've saved some of these charts, but let's see if like on Bittrex. Okay, we'll get to some of these questions, guys. I just want to keep this laid back. I had some questions earlier. I just thought I'd maybe answer it. I didn't know if Dan was here on position sizing, but then we'll get to some of your questions. Okay, we can look at oversold, need to buy altcoins for the long term. Okay, Nils, that's good. You guys can see what I'm drawing on the chart, right? If I do a circle there. Yeah, okay. Okay, so just to finish my point, I'll go back to something that we've been trading lately, like Ant shares or NEO. How do I get rid of this? Anyway, I just don't want to have all this junk up here on the chart. Well, anyway, so if we go to a daily chart, I got to get better with Coinigy. So here on ant shares, like how you work a position, guys, almost matters more than any signals or any type of indicator you use to get in and out of trading. There's lots of different models or techniques you can use, but really knowing how to work a position is going to make you a consistent trader, because you can, like, I actually started this position really poorly up here. And I knew we were overbought. I mean, we were 1, 2, 3, 4 days, and we had this huge exhaustion bar way away from the 8, which is this red line. So my traders know that that's called angle and distance. When the price creates this angle, and there's distance away from something like the 8-period moving average, which is this red line again, or what we call the bottom of the wave formation, which is these bands. But you can see how there's good distance, right? Between here and the 8, there's all this distance, right? And then look at the separation between here and here, right? So you don't even need an RSI like this to tell you that you're overbought up here, just because of angle and distance. Not only did you go vertically away from the 8, you created a lot of distance. So something can trade like this is different than something that's just grinding on a power trend. That's not as exhausting. Grinding like this is a steady climb. This is a phase transition spike up. You have to take profits into that. But I wanted to start a position, so I didn't want to see this thing go 2 times higher or 3 times higher from here and not participate. So I knew that we were overbought, but you could still start a position here because I kept it small. So if I have 10 entries, and let's just say a max position size for sake of this, of one, let's say on one particular play, like one cryptocurrency, you might want to commit $10,000, just as an example. Okay. If I'm going to trade light, I tend to think in terms of percentages of my max position. So if my max position I want to put is 10K into this ant shares play, then I think in terms of percentages. So my first initial buy, a small entry or a light size or small size would be 5% to 10% of my max position size. So $500 or $1,000 to start this trade. When I get heavy, I might do 8,000 or 80% of my max position size. And when I'm trading, I don't just cap my position play to 10,000. I might go to 15,000. I might even go to 20,000, but I might only be at 20,000 for 1 day, and then I start taking profit. But the 10,000 is an idea of basically that's kind of my core position, is kind of my max position size. So if my max position size is about 10,000, there might be times where, so like if this is my first entry up here, let's just say that's 1,000. I put in 1,000, okay, right here. Then we get a pullback. I buy another 1,000 here. That's 1K, 1,000. So I'm 1,000 here. I buy another 1,000 here. If I have 1,000 and 1,000, my average cost would be something like that at that point, right? All right. Maybe we get a little pop up here. Maybe I take a little bit of profit if we get in the money. Maybe I wait. We get a deeper pullback. Okay, maybe I buy another 2 lots this day, another 1,000. Okay, another 1,000. Okay, if I have 2,000 lots up here, and this is my average, and then I go buy another 1,000, another 1,000. Well, that's another 2,000 down here. That's going to bring my average lower again, right? And then boom, let's say on this is a swing line. I teach my traders all these different setups when they learn. We had a full access team, we called it, and I got 10 hours of training. I teach you everything on my model: cycles, trend, working positions, risk analysis, execution. We're going to actually start to incorporate that same trading into the crypto program. Anyway, I don't want to talk about that right now. But this is a swing line set up here in our model on this candle right here. And so on that particular setup, I would probably commit a position size that's closer to 30% of my max position, or 50%. So before I was buying 10% of my max, 1,000, 1,000, 1,000, 1,000. Here I might buy, boom, I hit it bigger, buy 5,000 on this candle. So then that brings my average nice and close to the market. Boom, you get 2 days move up in your favor, start coming out of some, start taking profit. And this is what we call adding and reducing. This is our add and reduce method. Okay, why that works well, this is how a professional trader works your position. You don't just plunge in at one price and put all 10,000 to work up here in our example, because guess what? You're feeling all kinds of pain on this move down, and then that's how traders end up stopping out right when they should be buying more. It's all about working your position. If you're too heavy here, too high within the cycle, just terrible location, you're not in a position to buy down here. You're doing the complete wrong action when you should be getting more aggressive, because you're way too wrong on your timing, but more importantly, you're way too over your skis on your size, or you're too much risk up here. But if you're light up here, then you can work the position, get your average cost down here, and then that's a profitable trade. Boom. Guess what? When we take profits up here, and we start rebuying in again here. And that's what we did. So I wish I would have saved these charts better. I don't know, I might have it on a different, I was trying to signal where we were buying on these charts, and then I realized you have to save it manually, which is pretty annoying. Some other platforms, they just will automatically save. Let me see if I don't want to go in too much of a lesson because I want to get to your guys' questions, but I think you guys get the point. If I were to change these, maybe it shows under these different colors I saved. So here I was showing you where we're taking profits lately, but we were buying down in these dips. I don't know if it's on any of these screens. Here's one. I had it signaled. Oh, that's on a different pair. And shares. No, I guess I didn't save it. But point being, we were buying into these dips, buying more here, taking profits up in here, rebuying, taking profit, rebuying, taking profit, taking profit. That's our add and reduce method. So that's what we're going to work on the prop program. That's what we work on as a team. It's tough for me to explain in text when you're trying to figure out how to work your size. That's why I call it the art of the size, because it's an art. It's not like a fixed do this, do that. You know, it's not a math, it's not a formula. It's more of a feel and an art. But There's specific concepts that you can use to get better at that. Let's see, what am I doing here? Okay, so let's see. All right. So taking profits on the high is actually giving more freedom on the decisions of what to hold. Yeah, sure. I mean, when you're in this add and reduce method, guys, I mean, the thing that I see a lot of new traders, and it's the same thinking. When you guys have a good run, you struggle with what should I do, because you have this kind of mentality where you can only buy a few times and you can only sell. Like that all or none thinking makes you struggle for, should I take profits? Is there more to come? Is it going to pull back? When you start to change your mentality and you trade in multiple lots, you take some profit. If it pulls back, you buy some more. It's a different mentality. You're not trying to always figure out what's going to happen next, because you don't need to know what's going to happen next. That's actually that's kind of a hidden secret in trading and psychology of trading. You don't need to know what's going to happen next. You just need to know what you're going to do. If it goes up, it can only go only three things going to happen. It's going to keep going up, go sideways, or go down. And so you don't need to know what's going to happen next. You just want to trade what is. Too many traders, they get in their mind, oh, this is going to happen with SegWit, or you know, the miners are going to do this, or I think that the new what's the new blockchain Tezos is going to do this. And you try to build a scenario in your mind of what's going to happen. And the danger in doing that is it's going to affect the reality of the situation. So you might be in a downtrend, and because you've built in your mind that this scenario is going to play out, it's so bullish, you'll block out the information that the market's giving you right now. And so I don't really care what happens next on ant shares. I mean, I've already on Neo ant shares, this is resistance. We want to take some profit after this run. We were buying into this dip. We want to take profit on the run up. Just like if you were long down here, you would want to be taking profit on this run up. And then you get to buy back in, take profit, buy back in, take some profit, buy back in, take some profit. That's what I mean by trading around a core position. But so from here, I'm not going to get out of all my long, because then I'll lose my core position. And if it keeps running to new highs, then I feel like I'm missing out on the upside. I've lost my position. I'm not letting my winner run. But at the same time, you got to take profits up here, because if the market fails and you come back down, you just wasted an opportunity to make some money. So the answer is you do a little bit of both. You take some profit and you let some run. If it pulls back, I don't really care. I'm just going to probably build back into the position. I got to see where my cycle is. I want to see what kind of setups I get. So either way from here, it just doesn't matter to me. I'm not trying to figure out what the next move is. There's no way of knowing. It doesn't really matter what the story is, why it's doing what it's doing. All we need to know is that the price right now is back to resistance. We were long from good levels. You want to be taking some profit now. Cycle's high. All right. I can just tell where our trader's at when they're always trying to figure out what the price is going to do. It's not really necessary. How you work your position matters more. Like I can listen to somebody on TV say, oh, well, Apple is blah, blah, blah. It's overbought, the iPhone this, yada, yada, yada. But they can't tell you how to trade his position. I want to hear a trader say, look, ant shares was back below whatever number you want to call this, 30s to 3,000 Satoshis. I mean, that's what makes it difficult about how they price these things. They should start coming up with some more standards as far as the fractions on these things. It's just, but whatever. If we want to talk in dollars, okay, ant shares was back at 6 and 5. We were building our position. We got a swing line set. Basically, we took out the lower high pattern that was in place for a week. That turned the intermediate turn bullish. We doubled our position, our stops below this week's low. Boom. Then we ran up into the first resistance here at the 40,000 level, or whatever it was, 15 or $9 in dollar terms. We took some profit. I took off a third. I'm going to keep the rest of my 2/3 for a retest of the highs from the middle of July. Take some profit into that resistance, and then we're going to let some run for new highs. That's a trader, not just talking about the story behind NEO and what's going to happen in China and blah, 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 blah. There's no way to figure that stuff out. It's not helpful. We want to trade what is happening, and that's learning how to read all these footprints of money and learning how to, it's called learning how to work your risk, learning how to work your position, managing your risk. That matters more than all the storytelling. Favorite altcoin for the long term? That's hard to say. I mean, my mentality is that there's a lot of horses in the race. Really hard to pick the one, right? That's going to do really well. But you can have a feel for the ones that have a pretty good story, that have a good management team. But at the end of the day, you never really know, right? Just like any company. I mean, Enron was a huge stock that everybody thought was never going to go down. Turns out they were cooking their books. See, that's the problem with the fundamentals. So for me, I'd rather say, okay, AntShares has a cool story. I'll keep an eye on it. Basic attention token, that's one I've liked. But for me, I care more about the chart. When I look at something like BAT, I like the story. The guy, if you guys know anything about it, the guy that did Mozilla, you know, I'm not a techie. There's so many guys in this space with computer science backgrounds that are brilliant. So I don't, just when I was trading treasuries, I didn't call the guy that was a rocket scientist, graduated Oxford and ran Deutsche and Goldman Sachs. I didn't call him and talk to him about the fundamentals of the economy. That was crazy. These guys are way smarter than me about that stuff. I called and talked to him about what I thought the chart looked like and how to play it. Hey, this is a swing line setup in our model. I like that we held the bands, made a higher low right at the 30-day. It held trend. There's no reason why we can't retrace 50% of this move and or make new highs. So when I see an interesting story and I see the volume behind it, or you look at like the market cap, I think it's good to have a watch list, but then really pay attention to the chart for your timing, because the timing matters more than anything. You can really screw up a trade if your timing's bad. I mean, and if you work your position really poorly. But I do things like I look at BAT here. Can I hide this, guys? Why can I click that down and off? Oh, right there, boom. Sorry. Okay, so I look at a chart like BATS and I say, okay, this is the first day it traded. It's hard to know how high this thing went. Some of these trades aren't real. I mean, the first day that Bitcoin Cash traded, nobody could even trade it. And it shows that the chart went to this crazy level. And I don't think it ever really traded there. You couldn't even trade it till the end of the day. So, but if it closed the day here, I know that at some point the price was up here. You had some resistance here. So this was a really strong first day, and then you pulled and retraced this entire move. And this is a swing line. You took that out. You got a nice little pop. Did another swing line here. And then this is the signs to me that you're starting to see some accumulation. So we've been working a position. And when I look here, I mean, it's a double back to 80. right? From 40 to 80. That's a double. But even if you went all the way back here to 12,000, that's that's a triple, right? So there's plenty of room there like that one. That's kind of how I look at it. I don't know if I have one favorite. Um, um, kind of like to see what's emerging. I mean, Neo has done really well. That chart looks good. Ripple right now happens. I'm not really sure I'm that excited about the whole decentralized versus centralized thing on Ripple, but I like the chart so far where that's come from. Various is how do you know when it's oversold and you need to buy? Well, this is kind of what I teach, but we trade based off of cycles and time, price and time. So in the world of trading and analysis, there's fundamental analysis, there's technical analysis, and those are the main two that the financial industry has been using for 50, 100 years. Technicals really came on the scenes more in the 80s, but nowadays everybody pretty much has moving averages and all the different, clouds and envelopes, and everybody's a professed technician these days. But then there's something I call mental analysis, which is the psychology of trading, which is really important. And then there's something that's called cyclical analysis, which is very few people do. So we pride ourselves on these two. And then we do a lot of technicals also. This one I think is pretty much, this should be 10% of your focus, the fundamentals. So the technicals, that has to do with trend, certain ways to identify the trends. And there's long-term trends, there's intermediate term trends within the long-term trend. You might have a downtrend for a little while on the hourly and 4-hour charts, then you get an uptrend, intermediate term, and then another intermediate term pullback, all within the long-term uptrend. So that has to do with price. When we teach these buy setups, or we teach trailing stop methods, or what we call BCI, we have different setups. But that all has to do with price. And on a cyclical side, that has to do with time, which nobody really seems to grasp the concept of that much. And that has to do with cycles. So we like to buy when the cycles are low. You got to kind of learn how to put it all together, because you can do really good analysis and then just totally screw the trade up because you don't manage your risk right. Meaning you had the right direction longer term, maybe it was bullish, but you ended up buying so poorly at bad timing and bad location, and you couldn't sit through the pullback, and then you end up stopping out right on the lows, and then the market rallies and you miss out on the play. So that's you got to kind of learn to put everything together. Cycles high, cycles low. Okay, but this has to do with the rhythm of time. And there's a lot of power and consistency when you understand time. We have pi concepts that we use. Pi is the perfect cycle. Fundamental. What about Stratus? I don't have that one really in my mind. I've been meaning to look at it. We don't have a position, so I don't even know what the chart looks offhand. We can look at it. Stratus. This chart to me kind of looks like Ethereum versus Bitcoin. It kind of trades like Ethereum a little bit to me. We had this big run up, and guys, you're going to get a lot, and you gals too, of course, when I say that. I'm not trying to be sexist. When you get this big run up in crypto, because there's so much volatility, if you take something like the Dow, it's just been slowly grinding. The pullbacks have been really shallow. When you have something that's really moving, the pullbacks are going to be sometimes greater than 50%. So you can look at a Fibonacci retracement, but essentially we have a wall concept we use. But I'm essentially taking this entire move up, and I just imagine it as one giant candle. Okay, and about 50% of the way is where you pull back to. Sometimes you're going to get the 80% retrace, which you retrace almost 80% of this entire move, and then you bounce. So that, again, and sometimes it just, you have to be a little bit more patient, but I like this hold here. You had a good bounce, but you've been making these lower highs up until here. And now this was the first new higher high here. I like these higher lows. You're still kind of consolidating. The market's not ready for another move up, but it certainly could do that. I mean, it's still basing. I think there's no reason to think that this can't take another leg up. It just kind of depends on how you play it. Cycle's kind of high. I liked it better down here. If you get above this high, though, there's a lot of room to go back to here and then to these highs. I don't know anything about the story behind Stratus. I haven't looked into them that much, which kind of says a lot about. I'm still pretty new to this space. I've spent many years and a lot of hours in the chair in front of the screens trading, but I don't know all the different altcoins as well. Some of you guys have been trading this stuff for 2-3 years now. You guys are really familiar with all the behind the scenes. What's the fundamentals on cryptos? Yeah, I mean, fundamentals like on a stock would obviously be earnings, right? Price to earnings ratio. You can, and if you guys have I have a finance background, so I've taken the corporate finance and looking at the balance sheets and understanding the ROI and operating cash, blah, blah, blah. That's all the fundamental stuff. So in the crypto world, I guess you could look at the space. You can always look at the industry, what the white paper, the team's trying to accomplish. The fundamentals would include, do they even have a product yet? Some of this stuff is all ideas, and you don't know if they're ever going to actually follow through and create anything, right? So that's why I would argue, guys, the fundamentals, especially in this space, pretty much useless. I mean, you want to say, okay, I understand their concept. There's a lot of potential there, but the way you have to invest and apply the risk is you have to trade these things. You have to know how to work your position. You got to know where you're wrong. You got to know how to add and reduce, take profits when you're overbought. It's not good enough just to buy and hold. I mean, that concept's dead. You tie up your capital and you sit around and wait. It's just, there's a better way to do it, and that's the add and reduce method. But you can get into that philosophically, the different fundamentals. You never have all the information on the fundamentals. Like I said about Enron, you just didn't know. You would have taken Arthur Andersen's word for it. Oh yeah, the accounting, they're in there being regulated by the accounting firm, multiple accounting firms. There's nothing wrong there. This is all fake. How are you going to know that unless you're on the inside? So It's very hard to know all the information, all the fundamentals, and you don't need to know. You're better off knowing how to trade the chart and how to work your position and how to manage your risk. That's going to serve you better than getting too caught up in the, because then there's a whole psychology of the marketplace. Sometimes it's not about what the truth is, it's about what the perception of the truth is. So you might be right that they have this technology, but the marketplace doesn't see it. Well, that particular cryptocurrency might just bounce around the bottom for years and years and years, and you just waste your time and capital. Only if the market perceives it as valuable or is confidence in that particular idea does it matter. So that's a whole nother aspect to what's wrong with fundamentals, is the markets don't trade on fundamentals. The market trades on anticipation of whatever it thinks about the fundamentals. You could have a company trading close, going all the way to zero because the marketplace thinks it's going to go bankrupt, and they never were bankrupt. It doesn't matter. It's what the perception is of the overall market. And markets don't trade based on what is, they trade on what they're anticipating, what might be. So that's where you could get in trouble. I mean, I always explain it to my traders. Like, if you guys want to try to figure out what the price of oil is going to be, well, think of it this way. If God himself came down and told you the price of oil is going to be $12 a barrel, I mean, what would you guys do with that piece of information? We're trading at 49 bucks or so, right? If God told you that the price of oil should be trading at $12 based on that's what the price is, the fundamental intrinsic value, what would you guys do on that information in the market? Like, what would your guys' market action be? Your oil's trading at 14 and you know it's going to be $12. It's supposed to be worth $12. Most people say, oh, I'll just short it because it's supposed to be $12. Okay, so I was just asking, in a scenario where you're trying to, this gives a good explanation of why the fundamentals don't really matter that much. I said an example. I said if you're talking about the price of oil, and I said if God himself came down and told you that the price of oil is going to, the intrinsic value of a barrel of West Texas crude is 12 bucks, and right now the market's trading up at like 49, what would your guys' next market action be? What are you going to do with that information? You don't have a position. You just been told that the price is going to be 12 and you're trading up at 49. Most traders say, well, I'd short, and I get really aggressive short because I know it's going to go to 12. I know where it's trading. So the problem is, the next question has to be, well, when is it going to be $12? Because if it's up here at 50 and you decide you're going to short it, well, what happens if it just trades from 50 to 45 to 50 to 40 to 50 to 55 to 40, and it does that for 3 years, and then the market, for whatever reason, thinks that the intrinsic value is up here at $80. How's that trade working out for you? You're heavily short here. You wasted 2 years as the market went sideways. Then it just ramps to 80, and more than likely you can't sit through that position and stops you out. And then the market collapses to the $12 that God said it was going to be, or that's the intrinsic value, 12 bucks. There's no timing component when you're looking at fundamentals. there's too many factors involved in fundamentals. Fundamentals can give you an idea where something might trade to. Understanding the fundamentals of Ethereum let you know that, okay, maybe this is going to be one of the dominant, tokens, right? Maybe it's going to be one of the dominant blockchain technology. Who knows how high it can go? From there, you got to learn how to trade the position on the way up, because there's going to be points where it goes vertical and it's going to collapse back on you. And if you're buying high and then you're feeling all this pain and then you end up stopping on the lows only to see it reverse and go to new highs, that's where people get all messed up. So the fundamentals are really not that important. Fundamentals should be like 10%, in my opinion, of your trading. The other 80–90% needs to have a timing process, and you need to understand the trend, how to work the trend, where you are in the trend, and you got to have some sort of timing process. And then again, back to working a position, blah, 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 blah. And anyway, that's just some of the psychology stuff that we always work on as a group. All right, so yeah, I mean, here we're talking about the fundamentals are good, right? But you need some help on the timing probably. And then feeling, that's not something we want to get into when you're trading. You don't trade based off your feelings. That gets into the psychology of trading. We trade based on a process. And we try to remove the ego. Try to remove, as a trader, as a human, you got to try to remove yourself from the process. And that has to do with the ego. That's all the psychology of trading. Sticking to a trading plan. Yeah, various. I mean, that's my attitude, is just common sense. Like I'll look into a token or a cryptocurrency just to get a feel for what they're trying to accomplish, and say, wow, IOTA, right? The Internet of Things, that's a pretty cool concept. I see that where the machines can interact with each other and buy and sell from each other's. That could definitely be the future. But you never know how long it's going to play out, right? So using the chart to help time a position, but we want to have a core position on that name. What else? I mean, we like Ethereum. We like all the main ones. I mean, Ethereum, Dash, Monero, Basic Attention Coin, Ripple. We've been buying. Ripple, I think, is pretty low lately. Let's take a look at that chart. That's Monero. And there's lots of good stories. For me, I just want to hear a little bit about it, and I say, wow, that's a good idea. There's potential there. Oh, you look at the management team, that's impressive. Or some of these guys you can look at and you can kind of see through them. I mean, management team looks like they've never run a business before. It's different. But I just tend to base a lot of our efforts off the chart also. So like Ripple did this very similar. It had a lot of interest, went on a nice bull run. Topping tail, well away from the bands, creating angle and distance here. And then you basically retraced 50% of that move up. You held the bottom bands here. This is a swing line setup in our model. And off of this move right here, I would have expected to see more follow through. And the fact that you didn't get it just means that it wasn't ready to go, wasn't ready for prime time again. And so this drift, it just hasn't it needs a catalyst. Nobody's paying attention to it right now. You know, it's not at the top of the charts for performance like ant shares. So people tend to chase this and then they forget about it when it's doing this, right? But this is when you want to be slowly accumulating. You don't want to be chasing up here, right? So we've been slowly nibbling here. I like the fact that it's back towards this dotted green line is called our pi line. That's a proprietary concept that I came up with. It's a cyclical thing. You cycle away from pi, you cycle back towards it. You're back here towards the 200. But you guys notice this red line here is the 8. The direction of that moving average just hasn't turned up yet. That's showing you the trend, the intermediate term trend. So you want to see this 8 start to hook and go the other way, and then we'll start to get more aggressive, because we view these as cycles. This is the left-hand side of the chart. This is the right-hand side of the chart. You don't want to be too aggressive too early. You want to try to catch this, the right-hand side, before the cycle back up. So you have to be patient when you're nibbling and then waiting for some signs, some more bullish. You know, if we trade back here, we'll buy more here, but I won't be getting aggressive until at least this intermediate term trend turns back bullish. And it's been bearish basically since you broke here. But I think whether you hold here or here, you're going to get another major upcycle. It's just not quite ready yet. So we've been stalking that one. And we'll see how it plays out. You know, if it can't hold the pi line, then I may take half my risk off. If it can't hold above this high, this candle here that started the whole move, then maybe we'll take that position off, take a stop loss, and just wait and see. But more than likely, you'll start to turn the corner here, and there's a couple techniques we'll use. We'll get aggressive when we think it's starting to break out. Yeah, Nils. I mean, there's a lot of stuff to talk about, and it's more fun for me. I mean, because I teach these concepts all the time. So when we start talking about the psychology of trading, that's where it actually gets more interesting, because you start to wrestle with these concepts in your mind. Like, well, am I projecting what I want to see happen in the market, or am I really trading what is? So we try to trade what is. We don't try to trade what we think is going to happen, because that's not embracing the uncertainty of markets. When you really embrace the uncertainty, you have no idea what's going to happen. And when you let go of that idea of having to know what's going to happen, and you understand how to work your position, and okay, if it drops below this area, I'm going to take half of my risk off and wait and see. Or I only have 1 or 2 lots. I'm being patient. I kept my size small. If it goes lower, that's fine. I'll get to buy a little bit lower, but I'm being patient. I'm waiting for the cycle to turn up. That's different than trying to, oh man, should I buy now? I need to know what's going to happen in the future. I need to know what is going to come down the line with Ripple. I need to know blah, 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 blah. I help my traders learn how to trade what is. And what is happening with Ripple right now is you're in an intermediate term downtrend. And if you're wanting to start to nibble and starting to accumulate, you need to be really patient with your size, because this can continue to drift lower. So there's nothing here to be getting aggressively long yet. And that's what we're doing. That's what is. There's no opinion. There's no arguing. The fact is that this is an intermediate term downtrend by the way that we talk about the markets. We talk about long term, you look at monthly, weekly, daily charts. Intermediate term is daily, 4-hour, hourly charts. Near term for us is 1 minute, 5 minute, 15-minute chart. And we break it into those 3 time frames. But right now, this is no doubt in an intermediate term downtrend, just by the nature of it's making lower highs and lower lows. And that changed right here when you took out this low. Because before you were basing right here, but this went into intermediate term bearish, and it's been stuck there for this entire cycle down. So we're waiting for different setups to start to indicate that the money's coming back in, and these are footprints of money. So the big players start to come in, or the money starts to, you'll start to see that on the chart. That's what I mean by we're trading what is. If I get a big candle, a bullish candle like this one, any of these over here, and I start to see this, boom. Let me draw it this way. I start to see this, boom. Right? And then maybe we get tight little range like this. And then boom, I get another candle like that. I guarantee you we'll be adding on this candle. We'd be adding on that candle, and I'd be getting heavy on this candle, because you'd start to take out this downtrend line. You start to take out this pattern of lower highs. And you start to make new highs. And if you would peel this back and go look at an hourly or 4-hour, what you would start to see is that this trend is starting to turn up. So this is where we'd be getting aggressive. And that keeps your average cost close to the market, and it keeps you at a danger if this thing just continues to fall. So anyway, it's tough for me to explain, guys, and without even kind of knowing the process from the beginning. But hopefully it's kind of making sense to some of you. You want to think about trading what is, not, we call that scenario building, where you're trying to project something on the market that's not reality. And that's not reality what you think is going to happen. What is happening right now is right here in the moment. That's where we try to stay. Well, anyway, guys, I think I want to do some more of these. It's nice to just not have to talk about a particular topic and just kind of talk about what you guys are interested in and different topics that come up. So we can do more of this. I like to do them towards the close because the markets are slower. I mean, it's a Monday in the summer. Markets were really slow today. The traditional markets, that is. I mean, we trade a lot of Forex and futures, but so I'll try to do some more of these live sessions. If you're not already following us, I would encourage you to follow the YouTube channel. You know, like the videos. That helps us, you know, however Google does their algorithm to boost us up there so we can add value to more people. And then, guys, if you're interested in joining our crypto team, it's an investment club where you basically there's like a membership fee to be on the team. That's where we collaborate. We get together at weekly meetings. We talk about this stuff. That info is, you can just go to my site here, jenkinsrm.com. And then it's $1,000 to get on the crypto coin team, as we call it, underneath services here, crypto coin team. there's a video I did, but essentially half of it's your membership fee. The other half is, I call it your seed capital. So I'm a fixed income guy. So if you ever wanted to get a seat down on the floor or at the board of trade, I mean, you had to pay a lot of money just to get down there and in the action. So I kind of look at that as your seed capital. But then there's powers in numbers. So not a lot of people want to commit a lot of capital to this market space yet, or maybe they just have a little bit that they're new to the market, but they still want to participate. And we can take more positions, and instead of trying to pick one or two horses, if you can have the whole field and then work your positions, there's powers in numbers. So as we pool our capital and then we collaborate on what we want to trade, and then you piggyback off my model as far as the timing goes. So that's what this is. And then we just recently added this. This is, so all the training, if you guys like kind of what I've talked about here, and I mean, my model goes really deep. So this is basically what I use with all the institutions. And, I grinded this. This has been my craft, and I've gone down a lot of dead ends, and I've blown up a lot of accounts, had a lot of failure, and then also had a lot of success when I started to put all this together and understanding these concepts. So this is basically 10 hours of me training on the model. You get all of that in addition to the membership on the team. So we just added that. That's brand new. That's a great value, guys. I mean, I tell the story when I tried to learn trade Forex, I paid 12 grand just to learn a simple few concepts and understand some things about the market. It was a weekend thing. To some people, that seems like crazy. That's a lot of money. Well, I don't know. I think when I see somebody spend more money on a TV set that'll never make them money versus going to get knowledge on something that can pay you the rest of your life, and you can always trade. I mean, that's doesn't matter as you get older. Professional athlete, your career is done in your mid-20s or 30s. Well, you can trade till the day you die in this game. So for me, 12 grand, that seemed like a pretty good investment in myself, because I had confidence that I could use that and it could return money over my lifetime. Took it into the fixed income markets and it translated into millions. So for literally, guys, it's basically $1,000 to get all the training and do it at your own pace at your own home. It's a great value. It really is. I mean, this is stuff that institutions would pay $5,000, $10,000 a month for. It's true. So, and then the membership, that just gets you in the team. We have a rival room, which looks like, I don't really have it up. 1 second. Hold on. It's like a Slack room. Some of you guys on Slack, same kind of thing. But this is our crypto team. Some of you guys are in there. So we just started this. It's growing quick. It's a great group. I mean, we have people that have been trading this market a long time, very techy, out in California. And then we have completely new traders in here. We have a lot of seasoned traders, guys that have been in the business a long time, totally new to crypto space. They're on the team. So anyway, guys, if you want to come into our room, if you have questions, just come back here to the site. There's a video down here if you want of me kind of explaining a little bit more. We just redid this whole page. Some Q&A at the bottom. But to get into our community, it's free. You can come into our chat room. That'll get you in the rival room if you can ask me questions, or my partners, Ritas and Alec, as well. But maybe we'll try to do this again Thursday. You guys can bring your tickers or different charts you want to look at, or different questions, or just talk about whatever. But hopefully added some value, and then you guys come join us if this is something you want to do or learn more about. It's a great place. I'm happy to help. It's a good group. I lost my other window. All right, guys, you're welcome. You had troubles getting in? Huh. Yeah, you can pay in Bitcoin for sure. Yeah, you can email us info@jenkinsrm.com. It should be able to get into that Riber. All right, guys. Well, anyways, good stuff. Some of you I'll see in the morning on the prop program. You guys enjoy the rest of your evening. All right, guys. We'll talk to you later.